In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, U.S. Attorney General William Barr has finally released Special Counsel Robert Mueller's 448-page, partially redacted report on Russian interference in the 2016 election. And social media is one of the biggest losers. We will tell you why. Plus, more unicorns ride into the public market. Pinterest shares soar 28%. Zoom videos spike 72%. I speak to both CEOs. And a snag for Samsung and its much-anticipated foldable phone. Reviewers report flickering and failed displays, including our very own Mark Gurman, who will join us. But first, to our top story. As President Trump put it, it was a good day. The partially redacted Mueller report is out for all to read, but the conclusions of Congress may not align with the conclusions of the president.
But I say it in front of my friends, this should never happen to another president again. This hoax, this should never happen to another president again.
Meantime, while Mueller concluded there was no collusion between the Trump campaign and Russia, debate swirls on the issue of whether the president obstructed justice. Mueller says the president repeatedly engaged in a series of, quote, targeted efforts to control the investigation. House leaders have subpoenaed the full report and called Mueller to testify. And the most redacted part of the report appears to cover Russia's meddling in the 2016 election via social platforms like Facebook, Twitter, Google. I want to bring in Bloomberg Tech's Eric Newcomer, and in New York and in Washington, we've got Bloomberg's Anna Edgerton, who's been covering the release of the Mueller report. So, Anna, there's so much to digest here. Tell us which points are being focused on the most, where you see the most potential conflict.
Right. Like you said, there are kind of the two sections that we're looking at, one on the issue of collusion and on the other side, the issue of obstruction of justice. And Democrats are really starting to dig into this and look at some of the evidence that's been laid out in this redacted report. When it comes to obstruction of justice, there were 10 episodes that are mentioned that Mueller said there were some legal theories about why that could or could not represent obstruction of justice. Now, William Barr, the Attorney General, interpreted those to not present examples of obstruction of justice. However, Democrats are going to look at that, and many have said, including Jerry Nadler, the chairman of the House Judiciary Committee, that it was up to Congress to decide whether or not that represents obstruction. On the idea of collusion, all that the Mueller report says is that there was no criminal conspiracy between the Trump campaign and the Russian actors that did interfere in the election. Now, what Congress is going to do is look at that and see, okay, there were no criminal indictments, there was no criminal conspiracy, but there were examples of the Trump campaign, members of the Trump campaign and his associates, talking with Russians and communicating with them in different aspects during the 2016 campaign.
Right, including a failed effort to get Hillary Clinton's emails, which were later released by WikiLeaks anyway. Eric, social media comes up repeatedly in this report. Talk to us about the mentions of Facebook, of Twitter, and what that means.
Yeah, they're front and center here. You know, obviously, Facebook and Twitter were the main places that Russian operatives were trying to influence the public. You know, there were sort of two campaigns here. There was the social media manipulation effort, and then there was the efforts to obtain emails and to hack in and get information on the Clinton campaign. And so Facebook and Twitter played a key role. Somewhat amusingly, Google comes up, and it's mostly sort of Trump administration figures trying to Google people and figure out who they are. So really, the focus in the Mueller report when it comes to technology companies is Facebook and Twitter.
Now, Anna, obviously this conversation is just beginning. You've got House Judiciary Chair Jerry Nadler saying impeachment is not out of the question, too early to draw conclusions. But are there any immediate risks for the White House based on what we now know?
Well, we do have a bit more information about some of the actors within the White House, like Attorney Don McGahn and kind of his objection to participating in obstruction of justice and kind of refusal to fire Rod Rosenstein at one point, saying that he didn't want to participate in that kind of activity that the president had asked him to do. And like Eric said, these companies are kind of front and center in the way that their platforms have been used, and that presents a risk for them as well, especially as we look towards the 2020 election and ways that lawmakers are going to want to protect the next elections from this same kind of interference. So there's going to be a lot of discussion on Capitol Hill about different ways to protect election security and make sure that this kind of interference doesn't happen again.
Now, Eric, I keep thinking about the day after the election when Mark Zuckerberg said it was crazy to think that Facebook in any way could have influenced it. Obviously, we know so much more today, but there has been a resistance from these platforms to admit that their potential role here. They have been working on it, but I wonder if any of this news will actually come as a surprise to them. What can they actually do about Russian bots infiltrating their services?
Right.
Exactly. Undetected.
It just seems so core to what they do at this point. The idea that there are bots on Facebook and Twitter isn't news to anyone today, yet it still feels like all over the services there are, anonymous accounts sort of peppering you with motivated positions, and it can be everything. I follow the Tesla Twitter a lot. There are real people who have financial stakes one way or the other. Then you think about something as terrible as neo-Nazis impersonating the very targets of their attacks to try and make them look bad. So there are all sorts of ways to look at how anonymity on Facebook and Twitter has sort of let insidious behavior crop up. And you have to wonder if there are going to be sort of approaches that aren't just sort of going after known Russian agents and instead sort of saying, okay, how can we build actual systems so that people know who they're interacting with and have confidence that, the Facebook group that they join isn't run by someone who's working for the Russian government or as their proxy. I think those questions are still far from answered because they're so core to how these companies have set up their social networks. And I think that's why it's been mostly a game of resisting sort of criticism rather than coming up with, okay, here's how we're really going to do things differently so this doesn't happen again.
Right, and the companies would say many of these accounts have been deleted. We're using humans, we're using technology to fight this, but certainly still big problems that they're continuing to fight. Anna, what happens next? At least tomorrow, what happens?
Well, like you said, Nadler has said, the House Judiciary Committee chairman has said that he is not taking impeachment off the table, that could be one way that House Democrats hold Trump accountable for some of the actions outlined in this report. He did say that he wants to subpoena the whole unredacted report as well as the underlying documents. So we could have even more evidence and even more information about the way that some of these companies were used in order to kind of facilitate Russian interference in the election. So there's going to be a lot more to look for on that front, and also the way that other committees, even the House Ways and Means Committee that's responsible for taxes and financial interactions, can take some of this information in this report and use it for their own investigations, kind of further the process of oversight over the White House.
All right, well, lots to continue to discuss. Bloomberg's Anna Edgerton and our very own Eric Newcomer, thank you both. Well, just 4 weeks ago, Facebook acknowledged that tens of thousands of Instagram passwords were exposed. Now it's saying millions, actually, were affected. In a blog post, Facebook stated that, quote, millions of Instagram users were impacted by this lapse. Users of Facebook Lite also affected. This is where passwords were stored inside the company in plain text. Facebook Lite is designed for people with older phones or slow internet connections, mostly in emerging markets. Coming up, Pinterest is out of the gate. My conversation with CEO Ben Silbermann right after shares started trading is next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Pinterest rose as much as 30% in its trading debut after raising $1.4 billion in the second biggest U.S. IPO of the year. Earlier today, I spoke with Pinterest CEO Ben Silbermann after the stock hit the public markets and asked how he would describe Pinterest to the public if it's not a social media company or a search engine today. Take a listen.
We really talked with investors about how regular people use the product every day. People use it to get inspiration for a whole range of things, everything from the food they cook to the clothes they wear to their homes. And it's really more about your personal inspiration. It's less about your friends. It's not really about following celebrities in the news. We wanted to make sure that everyone understood that because that's how our users see the product every day.
So you launched Pinterest 9 years ago, and many companies have gone public much more quickly with much deeper losses. Why did you feel that now was the right time?
We're really proud of the progress we made over the last few years to build out the business. We felt like we were at a point where the business had reached a level of predictability, that it could be in the public markets. We were also excited to having the opportunity to have access to public market capital. And the reason is that a lot of great companies have acquired other companies in the future. We thought this would enable us to do it. Finally, we just had a lot of patient investors and employees, so it's a nice moment to provide some liquidity for both of those parties.
Patience is a virtue. Some investors might look at Pinterest and say, you're just another digital marketing company. So what do you think makes your advertising model unique to other platforms?
I think the thing that makes it really special is that the reason people are on Pinterest, which is to get inspiration and do things with their life, it's really lined up with what advertisers want, which is to inspire new customers and get them to buy products and services they really love. What that means is that the ads on Pinterest can actually be really additive as long as we do a good job of making sure they're highly relevant. And I think that's just really different from a lot of media companies where ads are candidly a little bit of a tax. That difference in alignment, I think, is the biggest difference between us and some other media properties.
Now, one of the primary criticisms is that the majority of user growth right now is coming internationally, and that is where average revenue per user is lower than in the United States. How much room to run is there in the U.S. in terms of growing users, or is it more of a story about increasing engagement?
I still think there's a real opportunity to grow over time and to increase engagement. A lot of people might use Pinterest for one thing or two things, but they don't know the wide range of different ways people all over the world use the product. I also got to say that we're super proud that we're growing globally. If it was just a few years ago, the story would have been primarily a US-based service, and so it's just really fulfilling for the company to know that the product works all over the world.
So what is the plan to grow international sales?
We're actually just in the very first chapter of that story. So we're just hiring, our first local sales teams in places like Canada, Western Europe, Germany, and France. So we're just at the beginning of the journey, but I think there's going to be a real opportunity to show the same great results we've seen in the United States to advertisers all over the world.
So do you see profits coming soon, and if so, when? Or is your focus going to be more on investing to grow the top line?
We're going to continue to invest for the long term. We've shown really good margin improvement over the last few years, but my eye is always on what's going to make Pinterest great 3 years, 5 years, 10 years from now. And so that's going to be how we continue to run the business, and we're really excited to see it keep growing.
Now, Pinterest is great, Ben, at collecting dreams, but less so on executing them. What do you plan to do to better connect those two things?
We're always working to make sure people can bridge that gap between seeing something inspiring and doing it. One area that we're investing in is making sure that we match inspirational images with more and more products that are at a price point that matters for people and from retailers they really trust. So we just enable people who are retailers to upload all of their catalogs into Pinterest. We're investing a lot into computer vision technology to match those products with images. And we're not just doing it with shopping, we're also doing it with all the different use cases. So if you have a recipe on Pinterest, now you'll see the ingredients. People can write reviews. If you have a DIY project, you can see other people's experiences, whether it was easy or whether it was a little harder than they expected.
Now, you played around with buyable pins back in the day. Those didn't really take off. Do you really think that social commerce will be a thing someday?
I don't know about social commerce overall, but I definitely know that our users often want to buy the things they find on Pinterest. A lot of people say they discovered a product or service while browsing Pinterest. We just want to make it easier for them to go from that inspiration all the way to reality, which in this case would be a purchase.
Pinterest CEO Ben Silbermann there from the New York Stock Exchange. For more, I want to bring in Bloomberg's Elizabeth Fournier, who covers IPOs and deals for us. So, Elizabeth, what's the quick take on how Pinterest performed today? A nice but not too big pop.
I think that's exactly it, Emily. You got it right on the nose. It's a nice pop of about 28% for them today. It was a very stable day of trading for them. We didn't see too many wild swings. And that's exactly what you want coming out of the blocks. You don't want anyone to think that you've left any money on the table, but you don't want to see a drop in the shares either. So actually a pretty good first day of trading for Pinterest.
Now, meantime, you had Zoom going out on the same day, both in the sort of same valuation category. Zoom shares popped over 70%, and I don't want to give too much away, but we're going to hear from the CEO a little later in the show, and he said, I think the price is too high. What is the risk there when you've got a company coming out of the gate so strong?
Yeah, Zoom is such an interesting case study. It was this company that was valued at sort of about $1 billion in its last private funding round, and that's just 2 years ago. And then we saw it come to about an $8-9 billion valuation in its IPO, and then today as much as $16 billion. So actually bigger than Pinterest by market valuation. So it's a company that people are really sort of buying into the numbers. The interesting thing about it is that it's a profitable company, and that's what makes it stand out amongst this crop of companies coming to market at the moment. But again, the higher you go, the further you have to fall.
I have a chart here in my Bloomberg library which shows the average first day pop for IPOs over time. Of course, it was much higher in around the time of the dot-com boom. It sort of leveled off. But obviously, we see what happened with Lyft. Big first day pop. Now the shares well below their IPO price, which can sort of hang over the stock like a cloud. A psychological barrier for investors, whether or not it's subjective. So do you see Lyft's overhang impacting IPOs to come, or is what we saw today evidence that investors really are going to look at these companies individually?
Investors really seem to be looking at them individually and not as this sort of big group of unicorns sort of rushing towards the market. And I think we see that in the different reactions. There's renewed enthusiasm for every single one of these stocks that hits the market. Even though Lyft, it might feel like a long time ago, it was only 2 weeks. And they're, shares down about 20% since then. It's still early days for all of these companies. And I think it'll take a little while for everything to shake out and for us to see where the valuations really end up.
All right, well, you've got a lot more work this year coming with Slack, potentially doing a direct listing, Postmates, Palantir, maybe even Airbnb. So I know we're going to be keeping you busy. Bloomberg's Elizabeth Fournier, as always, thanks for stopping by. Coming up, Convoy is taking a big step to modernize the trucking industry with high-profile backers like Jeff Bezos. We'll hear from CEO Dan Lewis next. I'm Bloomberg Technology, live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. T-Mobile has come up with a new way to stand out from its rivals. The wireless carrier will offer checking accounts now. A new T-Mobile Money app will provide access to no-fee checking accounts managed by Bank Mobile. Monthly wireless subscribers who deposit at least $200 a month will get 4% interest on up to $3,000. Well, the $800 billion trucking industry in the United States is only growing thanks to the rise of e-commerce, bringing more demand for shipping. Enter Convoy, a nationwide trucking network and platform that is working to modernize the industry, cutting operations and reducing waste, backed by big-name investors including Jeff Bezos, Bill Gates, and even Bono. Convoy just rolled out a new program. CEO Dan Lewis joins us to tell us a little bit more. So, Dan, people have often called you the Uber of trucking, but obviously you're different. I mean, how would you describe what Convoy does?
Yeah, so Convoy is a service. We're a trucking service. We're nationwide, and we help small trucking companies get access to freight. So if a shipper wants to move something, most of the time they don't even own their own trucks. So they call Convoy, or they use our technology on the web, and then that's offered up to thousands of trucking companies, and we try to match it with the most efficient company. They can do it with the least empty miles, that's going to show up on time and get the job done best.
So tell us about some of the new trends you're seeing in shipping and e-commerce, and how your business is evolving to meet those.
Yeah, it's interesting. With e-commerce, there have been some different trends. Companies have to think about where are they going to stage all their products to make sure they can get shipped faster to their customers. And so there have been differences in terms of how the organization of freight has been around the country, different distribution systems, fulfillment centers. And we've been building a lot of tools to actually make it faster for trucks to get in and out of those facilities. That's actually a big part of the Convoy Go announcement today.
Tools like what?
For example, Convoy Go. What happens is a shipper, let's say someone's shipping coffee mugs, and they're going to ship a truckload of coffee mugs. They can hire a truck that rolls in with an empty trailer, and then that truck has to wait for an appointment time, gets backed up to a dock, they have to load all the coffee mugs, and maybe 2, 3, 4 hours later it's leaving. With Convoy Go, you can preload everything on the trailer that's sitting in their lot. The truck rolls in, 15 minutes later it's driving away. That was only available to really big trucking companies previously who could afford to have pools of trailers at all these different facilities around the country. Convoy's actually managing a universal trailer pool, and with Convoy Go, any truck can get access to it, even an owner-operator, one truck. So many more trucking companies can participate in this much more efficient system, so can more shippers. That actually helps trucks turn around faster, get more jobs done, and every facility can become more efficient, which is really important for quick delivery with e-commerce.
Are you seeing patterns change at all with the trade war that's happening between the United States and China?
We haven't seen a lot of difference in terms of the shipping cycles in the United States. There were actually a couple of periods where freight surged in LA because people were trying to get freight into the country before the tariffs hit. But other than that, we haven't seen anything. Now, you've got big name investors, including Bono. Why is Bono investing in a trucking startup, aside from maybe he wants to make money? Making money. It's interesting. I think that, I'm not a rock star, but I think what I found actually was interesting talking to them was that they really understand logistics. Their business is putting on shows and moving stuff from city to city with hundreds of trucks moving their shows. So actually, I think they can really appreciate trucking and logistics, and it's really personal for them because everything that they do is related to that. Now, Uber is facing this sort of ongoing issue. Are the drivers contractors or not, and how should Uber treat them depending on that characterization? We've seen some rulings in California where drivers of trucks actually have won, in some of these cases, treatment as more like employees. Is that an issue that you're dealing with? It's not really related to our business in the same way. There have been some situations where someone's essentially completely dedicated to a company, driving essentially full time for them, wearing the uniform, getting directed everywhere they're going. In our case, we're actually operating the same way that many other brokerages operate, where we offer the freight to independent companies that are running fleets of trucks. And they can then choose to accept that and do the job via our app. It's the same way they'd go and get freight from other brokers. So what's next? Yeah, so Convoy Go is a really big thing. We mentioned that. That's actually really going to change things and reduce waste. We actually think about our business as a waste reduction business in many ways. There are empty miles driven all the time. 30–40% of the time trucks are on the road, they're running empty. You have hours of wait time for an appointment at a facility, and then when the truck is back against that dock, you have load and unload time. All of that is time when truck drivers are not running with freight. So what we're going to do is figure out how to reduce that waste, and what's next is just cutting that down and creating a better experience. All right, CEO and co-founder of Convoy, Dan Lewis, thanks so much. Okay, thank you. Stopping by. Coming up, video conferencing company Zoom saw big gains on its first day as a public company, but will it be able to avoid Lyft's dreary start? We will discuss next. This is Bloomberg. Another tech unicorn has hit the public market, and unlike many of the other unicorns slated to go public this year, this one is actually profitable. Video conferencing company Zoom skyrocketed more than 70% in its trading debut Thursday, shares opening at $65 in what is now the fourth biggest IPO of the year. Many investors are looking to Zoom as a barometer for other companies looking to go public. I sat down with Zoom's founder and CEO Eric Yuan and got an unexpected response when I asked if he was feeling the pressure.
I do, because the price is too high. So
you think the price is too high?
Yeah, I think so. And but anyway, so yesterday we finalized the price $36. Today, wow, there's a big pump. So it is out of our control. We just go back to work. So.
Well, so how do you live up to it now?
I think first of all, I would say the market opportunity is huge, right? Over $40 billion market opportunity. And the customer, they do trust us, and our employees so far is also very excited, very happy. As long as we stay humble, continue working as hard as we can to keep delivering happiness to our customers, I think it will be okay in the long run.
Now, many people have talked about how Zoom is a rare unicorn in that you are profitable. Should we expect you to grow profits this year or focus on investing to improve top-line growth?
I think we should focus on the boats, and we want to grow for sure. That's our top priority. But at the same time, we also want to have a much more disciplined approach, right? And we want to have a right balance. And I think we should focus on growth. At the same time, also focus on the cash flow positive.
So you were last on our show to talk about your immigration struggles. The U.S. government had denied your visa 8 times before they finally approved it. Now you're taking a company public on a major U.S. exchange. What does that mean to you?
First of all, I appreciate the visa office finally giving me approval to come here, to come to Silicon Valley. I think one thing I learned is never give up. Keep trying, and keep working hard, and never give up. Have a dream, and someday your dream will come true. Today is, our dream coming true, right? To be a public Nasdaq company. I think many years of hard work, is well paid off.
Now, Cisco has begun to offer some of the features that you offer. Cisco, of course, is your former employer. How do you see competition from Cisco evolving?
And Cisco is a great company. I was there for 4.5 years. I learned a lot, and I really appreciate all the support when I was there. And we do not look at the competitors. We always spend time on talking with our customers. We try to be the first vendor to really understand the customers' problems, and then work very hard to come up with a much better solution to serve our customer well. This market opportunity is huge, right? As long as we care about our customers, we'll be okay. We do not specifically focus on our competitors.
And what about Google? Why should customers use your products rather than Google if they're already, let's say, using Google's cloud products?
So I'm using Google product as well, right? I'm using Gmail, I'm using Google Calendar, I'm using YouTube, and Google is great on many fronts, right? Like search, YouTube, and Google, the mobile phone. But when it comes to cloud video conferencing, the cloud-based video conferencing, I think we just spend more time on that. We really, care about our customer more than any other vendors. That's why customer like our solution. The feedback is Zoom just works anywhere, any device. I think if we spend more time, we allocate more resources on that than any of other competitors.
Now, what are the opportunities you see beyond video conferencing?
I think, the video is a new voice, right? You look at the traditional, the on-prem, the PBX system. I think in the next several years, they are all going to migrate to the cloud-based solution. I think this is not an opportunity, and because video, the voice is part of the video. I think this is another growth opportunity.
My interview there with Zoom founder and CEO Eric Yuan. For more on the company's IPO, I want to bring in Sequoia Capital partner Carl Eschenbach, who's on the board of the video conferencing company. Sequoia is one of Zoom's largest stakeholders. He is with us from the NASDAQ in New York. Of course, the biggest question here is whether Zoom can maintain its profitability. They did turn a slight profit last year, and now everybody wondering if they can keep that up. Carl is with us now from the NASDAQ. So, Carl, I don't know if you heard at the top there, but the first question I asked was, are you feeling the pressure? And he said, yes, I think the price is too high. What is your reaction to that?
It's always fun to listen to Eric either, talk or see him on a video like that. We are always so impressed with how grounded and humble and authentic he is. And he always is very forthright in his thoughts, and he doesn't hide his feelings. So that's what makes Eric so special. He'll share with what's on his mind, and at the end of the day, he's truthful about his feelings, and we've seen that over and over and over again with Eric in our engagements.
All right. Well, do you think the price is too high? I mean, the risk here is that it can't be sustained. The stock starts to drop, and then it becomes sort of a psychological issue for investors, which is what we're seeing with Lyft.
Yeah, to be honest, there's not a lot we can do to control what the street thinks and where they price this type of a company. What Eric and team can do is control their ability to execute. And when you look at the TAM that Eric was just articulating to you, Emily, there's a massive TAM out there of over $40 billion. And Zoom has an opportunity to really, tackle a big portion of that. If you look at their international business, I think it only represents about 18% of overall revenues. They're just now breaking into the Zoom phone market. They're just getting deeper and deeper into the conference room market. So I think if Eric and his team focus on execution and delivering happiness and results, I think the price will take care of itself, but not worry about where the street is sitting today.
By TAM, of course, you mean total addressable market.
Yes, ma'am.
Zoom got a lot of attention because it is profitable. You don't see that often in a tech company that is just going public. Do you think Zoom can and will maintain its profitability, that the focus will be profit, perhaps as opposed to top-line growth?
I think Eric will focus on both. I mean, the company is unique in that they're growing well over 100% in last year's revenue. And they're profitable and their cash flow, positive, which is very unique for a company of this size and scale, especially in the enterprise space. People spend a lot of money on go-to-market to achieve these type of results. But the way Eric has structured the company, leveraging a lot of engineering and deep talent out of China and just focusing on growing this business in a profitable way, I think he can actually do both simultaneously. The unique thing, Emily, about the product is it's gone viral. People all the time say, let's just do a Zoom. And with that virality drives a top of funnel demand for the product, which then gets them both the consumer business, the small business, and now deeper into the enterprise. So I think if they focus on growth, they can do it in a very profitable way and be unique just like they are today.
So what's your take on the coming IPO market this year? If I remember correctly, Sequoia is not really in the ride-hailing business. You're not an investor in Lyft or Uber, but you do have some other companies that could be coming to market this year.
Yeah, well, you can see by just the market's response to the IPOs today between Zoom and Pinterest and many others, that there's an insatiable, desire to invest in tech companies going forward. And I think we're going to see this continue to be a rich IPO market going forward. And for Sequoia, our objective is to partner with all of our portfolio companies from idea to IPO and beyond. IPO is just a day, it's an event. It's a recognition of the success of the company in the public market. It's a great branding opportunity, but really it's how they perform after you go public. And Sequoia just has a strong desire to stay close to our companies and work with them in the public market and hopefully continue to enjoy success just like leading up to those IPOs. But it's a healthy market for IPOs in the tech sector right now.
All right, Sequoia Capital partner Carl Eschenbach, big day for you being on Zoom's board. Thank you so much for joining us today. Well, Google and Amazon have declared a truce. The two will now let each other's video services on their respective gadgets. YouTube will soon be available on Amazon's Fire TV, and Amazon Prime Video will show up on Google's Chromecast and Android TV devices. The two companies have feuded before when it comes to businesses that they both operate in. Coming up, Samsung's a folding fail. Early test models show defects in the company's brand new device. We'll talk about how this will impact the rollout next. Another Samsung smartphone snafu. Samsung's Galaxy Fold smartphone is having screen issues after only days of use. The phone costs almost $2,000 and showcases Samsung's foldable display technology, which doesn't seem to be quite ready. Here to break down what it means for Samsung is our very own Mark Gurman, who is in LA. So Mark, you got a review device so that you could write a story about it, and you started having problems with your phone. What exactly happened?
Yeah, I can walk you through it from the beginning. So Monday, I went to New York City to a briefing to pick up the Galaxy Fold. They gave a little bit of a presentation, pre-briefing on how the phone works. Then we had some time to take some videos of it, and then I went to the airport and I took it out of the box and unboxed it. And as part of a normal unboxing, I peeled off the screen protector that goes onto the front of the phone. And apparently that screen protector is not something you're supposed to remove. Little did I know is that removing a sheet of plastic like any other phone or TV will get out of the box from this $2,000 phone will be the reason for it to malfunction. And here we are today, and Samsung's going to send us a replacement unit tomorrow, and I'll be sure to put it through its paces and keep you posted.
So, I'm reminded of the exploding battery situation, which Samsung was dealing with a couple of years ago. But otherwise, is this something you've ever experienced with a new model?
Yeah, I've never seen anything like this for such a high-end device or any device to stop working within, it stopped working 100% properly within a day. And after 2 days overnight, just sitting on my nightstand in my hotel, it just got progressively worse. I looked at the phone before I went to sleep. I posted a picture of that, and you could see half of the screen, the left side of the screen, is dead. I woke up, it was about 75–80% dead, and then by later that morning, the other day, the screen was completely dead. I believe that was yesterday. So it's very strange, it's unheard of, and it's surprising that Samsung will put a device like that out. And remember, this is a limited amount of people have these devices. These are test devices. Samsung hasn't said whether these are pre-production, if the review units are different than the ones that are actually going to ship to consumers. So we have to see what they're going to say there. But there's at least 2 or 3 other reporters from other publications who've reported similar problems with the screen.
So what is Samsung saying?
Right now they're saying that, hey, we want these phones back. We want to take a look at them. We want to see what the issue was. They were quick to, point some blame to removing that screen protector. But, I don't think that that's a really good way to go about it, blaming the removal of the screen protector. A screen protector should not be the difference between a $2,000 phone working or not working. And these companies have an obligation to build devices that take into account how people are going to use them. And people are used to taking screen protectors, plastic film off of devices before they begin using them. Any iPhone or other Samsung phone you've bought over the last 11 or 12 years worked the exact same way. So you're telling me this one, you remove it and the whole thing just stops working? It doesn't make too much sense to me.
All right, well, your tweet about the defect exploded the Twitter sphere. So we'll continue to follow this story and your assessment of what's happening here. Our very own Mark Gurman, thank you as always for that report. Well, the Elon Musk SEC saga continues. In early April, a U.S. judge gave both sides 2 weeks to resolve their differences. If they couldn't renegotiate, she said they would determine whether to hold Musk in contempt or not. Now, they're asking for more time. In a joint letter, the deadline for their resolution, this joint letter on Thursday, the Tesla CEO and the U.S. SEC said they had been unable to reach an agreement over Musk's social media regulation. Joining us to discuss, our very own Dana Hall. So this just crossed that Tesla and the SEC have failed to reach an agreement. What is the very latest?
Yeah, so they talked for an hour by phone. The SEC, Musk's attorney, Tesla's general counsel. They did not reach an agreement. They've asked the judge for more time. They've asked her basically for another week, and she said yes. So this basically just punts this down the road. But I think it's telling that they still haven't reached an agreement. I mean, they need to just sort of nail down, like, how does he tweet, how does he use social media, and how is it vetted, how is material information vetted ahead of time?
So remind us what they are actually agreeing on.
So the issue is they agreed in the fall that Musk would have a dedicated counsel review his tweets. What's been happening is that there is someone who's reviewing the tweets after they go out, but not necessarily ahead of time. And the judge wants a clarified agreement that will make it extremely clear, like, how are these tweets being reviewed, and are they being reviewed ahead of time or not?
Now, in the meantime, there was this debate about a specific production tweet, and then Musk, in the middle of all this, tweeted another tweet with some production information.
He's still tweeting away. I mean, in his view, he's not tweeting material information, and he has discretion. In the SEC's view, he's violating the sort of agreement that he agreed to in the fall, and so they just need to come to some clarification. The judge made it very clear that she wants them to resolve this. She told them to both put on their sort of, big adult pants and kind of work something out, but they haven't worked anything out yet.
So is there any indication of how the judge has viewed Musk's behavior in itself?
Not really. I mean, not today. I mean, she approved the extension.
So what happens next? I mean, obviously there were some concerns about deliveries. First it was concerns about production, now it's about deliveries. What numbers are we watching for when it comes
So next week's a really big week for Tesla. On Monday, they're having an autonomy day for investors where they're going to be showcasing their efforts to eventually make a self-driving car. Investors only, no analysts or media have been invited, to my knowledge. Wednesday, they report earnings. Everyone's kind of expecting it to be terrible given the miss on the deliveries, and then on Thursday they've got to come back to the judge with some kind of an agreement, and if they don't have an agreement, she could find them in contempt.
And let's put this into a bigger context. Musk's tweeting has been a huge marketing tactic for the company. They don't really do a lot of marketing, right? I mean, he is the marketer in chief.
Right,
Which is sort of why this is important to Tesla, I suppose.
Oh, absolutely. I mean, Elon is like the key. He's like the Lee Iacocca of Chrysler. He is the key pitch person for the company. And they don't spend money on traditional advertising. They don't do radio or TV. But there is, they do events for their owners. They have a lot of, influencers in terms of Hollywood stars. But yeah, Elon tweeting it is how customers engage with him.
All right, Bloomberg Stanton Hall, I know you'll keep on it. Musk keeps you busy. Thank you so much for that update. Still ahead, Airbnb is betting on a startup focusing on inviting spaces for business travelers, leading a $160 million funding round. We're going to speak to the CEO of Lyric, Andrew Kitchell, next. This is Bloomberg. Well, the thought of extended business travel sends dread into the hearts of many executives, including yours truly. But Lyric is attempting to improve on this market, offering premium apartments into studios with hotel-quality cleaning services for short-term visits or stays of as long as 200 days. And it just got a big shot of support with a $160 million funding round led by Airbnb. Lyric co-founder and CEO Andrew Kitchell joins us now here in the studio. Andrew, welcome.
Thank you so much.
So describe to us what you do, because you don't just rent spaces, you actually design them.
Yes, so think of Lyric as a network of spaces. And our team actually designs and manages stays for business travelers. You can stay with us for a single night to 200 plus nights. But the spaces we design are, since our studios and one bedrooms, they come replete with a kitchen, a full lounge that flexes into a workspace. So think of them as very experience-rich spaces.
Now, we're looking at video of these spaces now. They're obviously beautiful, more beautiful than many hotel rooms I've stayed in, but you don't necessarily get the concierge service. You don't get the additional attention that comes with staying in a hotel when maybe you need something. So how do you balance that?
So we do have 24/7 support for all of our folks. For the business traveler who's coming in at any hour of the day, the goal is to get as quickly to your space or as quickly to your space as possible. So all of our spaces have digital locks, digital access. You can come in at any time. We talk to folks who just wanted to get into their space and start to either work, relax, etc. So that's why Lyric is designed to be seamless as opposed to kind of really service heavy.
So what does an investment from Airbnb mean? I suppose you could also be seen as a competitor to Airbnb.
Well, Lyric is an operator. That means the way to think about us is kind of like a Starwood, right? So just like Starwood sells inventory on Expedia, Lyric designs and operates inventory that we sell on Airbnb, Expedia, etc. So not a competitor, we're a full stack operator. We take care of our guests end to end. And Airbnb's investment just is a recognition that we're pretty darn good at taking care of our guests. People really enjoy staying with us, so we're now able to create far more supply for those folks.
And some of your other backers include real estate folks.
Yes.
So, talk to us about who the other investors are and what they want in terms of having a stake in your service.
Sure. So Airbnb led the round, but they were joined by Tishman Speyer, RXR, a major New York team, Barry Sternlicht, the founder of Starwood Hotels, also a large real estate owner, invested in both the A and now the B as well. And all of these folks, what they're seeing is that there's a different thing that people want when they travel. You hit this early in your show when you talked about the modern business travel. Business travel can be scary. At Lyric is pretty darn delightful. So they're seeing that, they're investing in Lyric to support the growth of that.
So do you look at WeWork for inspiration? Is that sort of a comp here?
Interesting comp, potentially. I think in general, WeWork, Lyric, other teams are all looking at the redefinition of space and what people want when they travel or when they're working, right? So we have individual spaces. It's less kind of a shared workspace. Obviously, Lyric designs independent suites for folks to stay. Lyric and WeWork are both just representative of, again, a shifting real estate landscape.
You've got 380 suites on offer across the U.S. How do you expand that inventory?
With a good funding round and great partners.
Is that how you're going to use this? I mean, what is the expansion roadmap?
The two investments we'll make with this financing are both expansion of supply, so we expect to add 2,000 more units in the next 12 months, as well as investment in the technology stack that makes these places seamless. So everything from maintaining cleaning teams, making seamless access easy, personalizing your stay experience. We'll be able to invest significantly in a tech stack that's already enabled a pretty unique product.
So what's the long-term plan? I mean, we just saw Airbnb buy Hotel Tonight, even though they said they'd never sell. Is that something that you are looking towards, you know, joining a sort of a bigger corporation, or going it alone and trying to grow?
We're having too much fun now to do anything but keep building. So we, with Airbnb, the real estate folks, and the others that are supporting us, we have the opportunity to continue to invest in what the kind of the next generation of supply looks like from a technology perspective, from a design perspective. There's so much room to grow. We're just focused on that right now.
All right, well, maybe our next business trip will be a little less dreadful. Andrew Kitchell, CEO of Lyric, thank you so much.
Thank you so much
for stopping by. That does it for this edition of the show. We won't have a show tomorrow. It's Good Friday. The markets are closed. But when we return, we will be here on Monday with an exclusive interview with Grab co-founder Huiling Tan. We'll talk about how the ride-hailer is holding on to its market share in Asia. And we're live streaming on Twitter. Check us out at Technology and follow our global breaking news network TikTok there. This is Bloomberg. Have a wonderful long weekend.